Hi, this is Drew Tignanelli. This is, what is it? Is it a January update, or
yes, it is
going on in February?
It's January, and that means that we are in prognostication season. You know, every big analyst at every big and powerful firm is saying what they think is going to happen in the markets in the coming year. Unfortunately, what we know to be true about these is that they are consistently off base.
Yeah, that's absolutely true. Whenever you get a big consensus from all the analysts that something's going to happen, last year they said 8 to 10%. Last year was 31%, and so they were only off by 2/3.
Yeah, details.
But that is very true. That if you want to get a sense for what the year's going to do, you just watch what the analysts are predicting. And if there's a general consensus of where they're all piling into, and this year it's 5 to 8%, you can be sure at least that that's not going to happen.
Right. Something else is sure to happen, but probably not that.
Probably not that. And actually, what one person has concluded in his study of this phenomena,
His study of studies
of people making
prognostications.
No, that thing. Not procrastinating, but prognostications. Was that if they crowd around one area, like say 5 to 8%,
sure,
it's more than likely to be extreme on one side or the other. In other words, it's not likely to be just beyond or just below or just above that. It's likely to be extreme.
Yeah.
So if they all came in at, they expect a big year next year, you would expect a low single-digit year. If they all came in that, there's no way the market's going to go up next year, you would expect it to go up and go up fairly nicely.
Sure.
So we're at 5 to 8%. So you're either going to have another big year, or we're going to end up negative this year. That's I think the only way you can conclude from the studies that have been done of these herd consensus prognostications.
Sure. All that said, however, there are some very interesting pieces of information that are floating to the surface. What are the most important?
Well, in our commentary that we sent out at the billing just last week, you had a lot of good information in there about that this is one of the longest running spans of the stock market without a negative year in between. 5 years is the norm. So we've had 5 years of up moves without a down move in the stock market. That's about the longest it goes. You have had a 7 or 8 year move between 1982 and 1989, so that's 7 years. See, I
good.
do good math.
No, I think
very quickly.
Mental math, solid.
You
I would
like
have been
that.
using my finger calculator, but
83, 84, But anyway, 7 years is the longest span. So right now we're on 5. So we had 2009, 2010, 2011, 2012, and 2013.
Oh, is
you
that
like
how it
that?
worked? Yeah. Okay.
And,
Good.
and so, that's concerning. But you don't, like we said in the newsletter, you can't make a conclusion that this is what's going to happen.
No.
But you always put history in context.
Okay.
Because history will never absolutely repeat, but it always rhymes. So you say, okay, historical spans are 5. And we're at 5. We haven't had a correction, so we need to continue to be cautious. Is what we've done. We've continued to be cautious. Maybe one day we won't be cautious, but right now we're continuing to be cautious.
So history doesn't repeat itself, but it often rhymes. Now, that's a phenomenal quote. Was that yours, or did you poach that off of someone else? I'm just curious.
I did poach it off someone else, but I have no idea who.
Oh, great.
You know.
I did. We looked it up at one point.
Wasn't
in time.
it?
Was it
Mark Twain
I think
said
so.
that history
it
never
might have been
repeats
paraphrasing Mark
itself,
Twain.
but it does rhyme. And I've followed that philosophy for years, and it can serve you very well.
Okay, so the beginning of the year, we also have tax season coming up. What are a few things as we start to get those pieces of mail with tax information that you would be suggesting people keep an eye out for this year?
Well, one of the big ones that I continue to say this is a critical issue is charitable receipts.
Okay.
Do not file your tax return without proper charitable receipts. And in our commentary, we did give all the detail that you need on a charitable receipt. Like if you give cash, $1 of cash, and you want to take a deduction for that $1 bill you put in the poor box or whatever, you cannot do it without a receipt.
Okay.
If you give $100 in a check, you can do it as long as you have a canceled check.
Okay.
If you give $250 in a check or more, at any one time, you have to either have a single receipt for that single contribution, or you have to have an itemized receipt from the organization at the end of the year. So let's say I just give $250 to the American Heart Association. I need a receipt for that one donation.
Okay.
But let's say I go to church weekly and I give $250 a week for 30 weeks.
Right.
I can get either a receipt for each of those 30 contributions, or I can get an end of the year receipt for the, what would that be?
Well,
$7,500.
Yeah, right.
That was good.
That was really good.
250 times 30? Am I right? $7,500, you know, and you can have each one itemized, January 10th, January 18th, you know, February 12th, and each one itemized, 250, 250, 250, and that counts. And you have to have a receipt if you give more than $3,000. So let's say you're giving $100 a week for 50 weeks to an organization. Your canceled checks will cover each. It's amazing how good you are at that too. 100. I lost my track here. You can have a canceled check for each $100. But you have to have a receipt for the cumulative $5,000.
Okay, so you have to have a receipt. Do you have to submit it with your tax return?
No, you don't have to submit it. And that receipt must say no goods and services were received for this contribution.
Okay.
It must be on some form of formal letterhead from the organization. Now, formal could just be a white sheet of paper that says, this is our name, this is our address, you know, something like that. But there has to be something legitimate about that receipt. No goods and services with all that information. Okay. That's a critical point. One more thing. Please. If we're doing your tax return, set your appointment up and come in as soon as possible, even if you don't have your Schwab, TD Ameritrade, or Fidelity statements of accounts that we're holding for you. Okay. Because we're going to get them. We don't need you to get them. You don't even need to bring them. We're going to get them. We're going to enter that information in. Also, bring your login information for any financial institution, whether it's with us or another brokerage firm or an insurance company or whatever. Bring that login information, because a lot of times I can download that information right into the tax return. Okay. But if you're getting your tax return prepared by somebody else, or you're doing it yourself, do not do the capital gain and loss report using just the brokerage firm's numbers. Even though they have, by law, they have to report it to the government, there's nothing that says they have to get it right. Isn't that funny?
And they're just getting started with
And they're just getting started. So. But they'll never be able to do the attention to detail on that capital gain and loss report that we'll be able to do. And so by checking what we're saying and what the brokerage firm is saying and putting the two together will get you your absolute best results.
Okay, so make sure you reconcile your capital gains and loss reports from the brokerage firm as well as from us.
Yes, and I'm sure there are other things that I'm interested to talk about on taxes and so forth, but I don't have the time right now. Well, we wanted to make this a quick video. So anyway, this is Drew Tignanelli saying God bless. So, Tim,
Drew,
a lot of people kept saying to me, where's Tim? How come Tim wasn't in the last video? How come Tim didn't wish us a Happy New Year? And is he still with the firm?
Does he care about the new year?
So, I think you should wish everybody a Happy New Year so they know you're still here.
I would be more than happy to do so.
Yeah, go ahead. I'm going to just rest back.
A happy and prosperous belated New Year.
Also, there's a couple other employees that want to say Happy New Year.
We'll pass the camera to them.
Well, it's Roger Bear from the Financial Consulate. I want to wish everyone a happy, healthy, and prosperous 2014.
Hi, this is Deanna Tefke, the voice of the Consulate, wanting to wish you a Happy New Year and all the best for 2014.